Good morning and welcome everyone to Moneycontrol live stream. It is a positive start coming in for Dalal Street, but let's look at the top gainers. Hindalco, Tata Motors and Cipla. These are some of the top gainers that we have on the screen. Bajaj Auto, BPCL and Bajaj Finance. These are some of the other top gainers that we have. 19,190 comfortably sitting around that level. Right now the sentiment seems to be much in the favor of advances as compared to that of declines. Asian Paints, NTPC and Adani Enterprises. These are some of the other top gainers that we have on the list right now. Let's also look at the top losers just to see how the trend has been shaping out ahead of the Fed's meeting. UPL, Bharti Airtel and Britannia. These are some of the other top losers that we have. Apollo Hospital, M&M and Eicher Motors. These are some of the other top losers that we have on the screen right now. But let's actually navigate now our discussion more towards the technical and how we can navigate the current market situation with Osho Krishan, the Senior Analyst, Technical and Derivative Research at Angel One. Morning there, and apologies for the delay, Osho. I'd like to start by asking you, what do you make out of the 0.25% of gains that has been witnessed by Nifty 50, 19,000, nearing around that 19,200 mark? What do you make out of it, and what's the strategy and the recommendation for our viewers out there?
Very good morning, Nickey. Well, looking at the overall data setup that we have witnessed yesterday, that overall FIIs are still something where they have continued their selling spree. So we are not very much optimistic in the current market because there has been some kind of stability in the global market. So there is some kind of rebound or resurgence that can be seen. But these resurgences are basically driven by the heavyweight counters of index. So there will be a large cap index which is moving, which is actually driving the market as of now. But on technical perspective, if we will be looking for the technical or level specific zone, then for Nifty, 19,250 still holds a very stiff resistance. And once it surpasses or once it gives a decisive closure above 250, then only we will become bullish in the market once again. Else, till that time, there can be some kind of consolidation that can be seen. On the higher end, 19,250 should be acting as the resistance, and on the lower end, 19,000 should be acting as the support zone. So 200, 250 odd points is something that we are expecting that our market should hover in between for the remaining trading hours.
So do you think it's more like a dead cat bounce which has come through right now, and some more consolidation is likely to take place before we see the final levels moving on to? Apart from that, also your word coming in on Hindalco, that's one of the top gainers that we have on the list right now. The stock seems to be doing well for a couple of days. What do you make out of it?
See, overall, metal spaces are not very much attractive as of now, but looking at the technical chart of Hindalco, it is still hovering between the 100-day and 50-day exponential moving average. So there has been no significant changes in the technical perspective. It is consolidating in a very narrow zone of 455 to 465. So until it surpasses 465, 468 zone on a convincing basis, till that time, it is better to stay sidelines. Once it surpasses on a closing basis above 468, then one should look for opportunities on the buying front.
Absolutely. Also, look at the FII trend. There have been sellers across the index futures, index options, stock futures, across the board, right? There is no place to hide right now when it comes to the FII selling, at least. With that in perspective and the position now being more towards the shorts, how are you looking at the current scenario? What's the strategy there in the derivative segment?
See, overall, as you have mentioned, that FIIs have continued their selling spree in the cash segment and even in the index future. But what we can figure out from the recent developments, that FIIs have seen a lot of selling in the market, and because of which the long short ratio has plunged to the very oversold territory of 12%. So historically, whenever we have seen such kind of numbers on the derivative front, from there onwards, we expect a bounce to come, a resurgence to come. But looking at the overall setup for the week, there is a very eventful week because all the central bank across the globes are going to have their policy meet outcome. So that will be having a very significant role to drive the market in the near term. But overall, looking at from the perspective of FIIs, they are still on the short side, and that is why we are also not very much aggressive looking at the recent bounce in the market.
Sure. I'd like to address a few stocks and news and come back to you, Osho. Typically, the one with which we're talking about, DLF. where the numbers have been rather encouraging. 2% uptick coming in for DLF in terms of stocks and news. The revenue is up by 3.5%, and the EBITDA has also as much inched higher by 6%. The margins have come in at 34.3% as compared to 33.5%. Overall, if you look at the net profitability, it's helped by the higher rental income owing to the rise in occupancy. Also, there is a higher collection which has driven the company into a net cash position. Marico, that's another one that I'd want to talk on to before I go back to Osho and check with him his view on Marico and DLF. Right now, Marico is also inching up. You've seen gains to an extent of 0.3%. Revenue is down by as much as 1%, and EBITDA is up by 15% for this one. The net profitability is also, almost inched higher by 17.5%. Procter and Gamble, another one where the revenue is almost that you're seeing is up by 9%. There is an operational efficiency which has crept in and which has led to the operational EBITDA up by 33%, and the net profitability too has stacked up by 36.4%. Osho, come in on these three actually. DLF, to be more specific, that's typically done well, and also P&G, which is up by as much as 1.5%. What do you make out of these two counters?
See, for DLF, there has been no doubt there has been a very strong rebound that can be seen in the past 3 days. But overall, currently it is hovering at a very crucial resistance of 570, which was approximately the previous swing close. So once it surpasses the zone of 570 on the closing basis, then only we can see a very strong V-shaped recovery in this counter. And from here onwards, we can expect another 30 point of rally. That means for DLF, 600 is something that we can see on the cards. But as of now, it is not very much advisable to be very aggressive in this counter. Better to wait for some kind of retracement towards the zone of 555 to 550 odd levels, and there we should look for opportunities on the buying side. And coming to PGHH recently have seen a very consolidated move. There has been no significant changes as of now, but looking at the technical perspective, it is forming a sloping channel pattern. So there will be a breakout only once it surpasses the zone of 17,200. So till that time, it is better to avoid the counter. And once it surpasses the zone of 17,200, then one can look for opportunity for upside target of 18,200 to 18,500.
All right, that's the word perhaps coming in. Osho, thank you so much for taking out the time and joining us this morning. Indeed, a pleasure chatting with you.
Thank you.
All right, let's navigate our discussion quickly to the fundamental side of the story ahead of the Fed outcome. A bit of cautious sentiment which is prevailing in the markets, a bit of recovery in the ground that has come in, but how sustainable is that? Let's actually get more of the insights from Hemang Jani, the market expert, joining us this morning. Good morning there. Thank you so much for taking out the time to have this interaction. I'm going to start off by asking you, what do you make out of the current situation? A bit of sell-off that came in for 7-8 days, a bit of recovery that has followed through ahead of the Fed's meeting. Across the board, we're seeing central bankers going to be meeting in. How do you read into the situation, and what do you think will be the momentum going forward?
Yeah, good morning. Thanks for having me. I think there are two factors that we have to bear in mind. One is that the current earnings season, which is underway, numbers by and large have been good. Of course, with certain pockets not delivering, good set of numbers, but at an aggregate level, at a Nifty level, we think that the numbers have been good, which is surely positive. Other thing is that the global setup in terms of bond yields and few more important events which are lined up, how that unfolds is something that surely will have a sentimental bearing, because the large part of the sell-off or the weakness that we've seen in our market was driven by the FII selling. So that is something that we have to really watch out for. And thirdly, the geopolitical, current tension which is there and how actually it unfolds. Though the possibility of that escalating into a major regional conflict looks limited, but that is something that surely the market will watch out for. Overall, we continue to be positive on the market. I think a small correction has already happened both at the index level and the broader market. But from here on, we should be looking out for good buying opportunities from a medium to long-term perspective.
Hemang, I just want to understand, what did you really like in the earnings season? Because there was a bit of disappointment which came in from the IT counters overall. There was a guidance cut again, and perhaps the hopes of recovery in the second half were dashed. There was a NIM compression which came in from banks. FMCG quite didn't really perform well. What really stands out for you in a market like this? And also L&T will be reporting in the numbers. Are you expecting any kind of surprise coming in from that one?
Yeah, so the domestic oriented sectors, be it banking, financials, auto, real estate, they delivered a fairly good set of numbers. Of course, you had some pockets of disappointment in terms of NIM compression, or a little bit of provisioning or slippages related issues. But by and large, I think the domestic oriented sectors have done well. Coming to L&T, I think it's going to be a blockbuster quarter, both in terms of the revenue, because across the ENC segment, be it private, the government led, and even the export, the company seems to be doing pretty well. So we expect almost about 24% growth in the revenue and a very healthy margin at about 8.6% when it comes to L&T.
All right. In markets like this, what typically are you looking at? Because there is some amount of recovery that has come through clearly in the last 2-3 trading session. How are you reading into this? Are you looking at it more like a dead cat bounce before more momentum could pick up, or do you think there are themes right now which can actually, lead or just drive the further momentum of the markets? How are you looking at it? What's the assessment?
I think the market has completed its corrective phase. Broader market has seen a correction of almost about 10% at the index level. Bank Nifty has seen a correction of 10%. Nifty would have seen about 6%. So I think a majority of that is over. And now in this phase of the market, we should be looking out for buying opportunity. Yes, you will have a little bit of volatility because of key events lined up, because of the geopolitical issues, selling by FIs, but that's all part and parcel of the overall market cycle. And overall earnings picture continues to look very healthy, and we do not see any concern on that front. So we should be looking out for buying opportunities at this point of time rather than looking at this as a dead cat.
Okay, so where typically you think there could be more traction? Essentially, I'd also want to chat about metal counters. They've been doing well with the rounds around China stimulus measures that have come through. But fundamentally, how does that augur well for them? How are they looking? How rich are the valuations at this point of time after a lull that we've seen for these companies over a period of time? How are you reading into something like a non-ferrous company more than a ferrous side? Where is your preference?
I think the outlook in terms of metal pack is not so positive. I think China, yes, there is certain amount of infusion they're trying to do to revive. But when China being such a big economy which is slowing down, and even Europe, which is an important continent for the metal sector, is not showing any great signs. So fundamentally, we would stay away from metal space at this point. I think it would be rather prudent and sensible to focus on the domestic oriented sectors and companies.
And when you say that, what would you like within that space?
So we like whole host of sectors, like banking has undergone a lot of correction and many companies delivered good set of numbers. So ICICI Bank, Axis Bank, these two companies we like. Auto, I think Maruti was a blowout performance. So surely that will remain a top pick. Bajaj Auto, if it corrects another 3 to 5%, would present a great opportunity. I think cement is another sector where the numbers have been good. The outlook is looking even better. So Ultratech, Ramco Cement, these two are the preferred picks that we have.
How is the situation typically stacking up for cement players right now? Ultratech Cement was one of the top gainers that we saw yesterday. The stock rallied after the capex plan was being announced, and the capacity now seems to be auguring. With all of that in place, a lot of capacities which are going to be coming up or perhaps are ongoing, do you think the demand catching up to the pace of supply? Or you think that you think the industry right now has the kind of pricing power running ahead of the election, right? Ahead of the demand situation, stacking up with the supplies and the election combined together. How are you reading into it? How are you connecting the dots?
There is a lot of consolidation in the industry, as we've seen with Dani taking over ACC Ambuja. Smaller companies are, being acquired by the larger players. The volume growth picture continues to look good. We've seen how construction activity has picked up across private and public sector. So that bodes well for cement. The pricing pressure in terms of raw material prices eased out. So I think, the sector looks quite promising from a 1 or 2 year perspective.
I also wanted to chat with you about Honasa Consumer, the parent company of Mamaearth, which is going to be the second company to launch the public issue this week. It's launching it the in fact, the IPO today itself. How are you reading into it? Have you looked into the financials? Typically, it seems more like an inorganic expansion story. The financial is a bit of drag in terms of one of the costliest acquisition. How are you reading into it? Would you recommend subscribe to this one?
No, I think as we all know, earlier also the company had planned the IPO and the valuation that time was very high. Now the valuation is almost 40-50% cheaper. But if you look at the earnings profile of the company, it's quite patchy. Certain quarters there are periods where you have losses. Then again there is a certain bit of profitability, so that is not giving much of comfort. And typically in the current environment, or the appetite for companies like this, which are very highly valued and where the profitability is missing, I don't think we are in that scenario. So I think from our perspective, it would be a clear avoid.
Okay, that's clearly the word coming in. It's a clear avoid. And if you look at the performance, just playing the devil's advocate here, just also one of the perspective that I want to add in, Hemang, do you think at this point of time the revenue CAGR seems to be higher as compared to that of its peers, and perhaps at this building stage that they're perhaps targeting a volume over their profits? Is that the strategy that they're applying, and something that can, potentially scale up and then operational efficiency could come in? How are you reading into it?
He is in an expansion phase and trying to widen their footprints, and last probably 2 years, they've really done a good job at that. But the fact of the matter is that this entire space is overcrowded. The kind of money that you need to expand is huge, and to turn profitable will take a while. So I think in the current scenario, once you see the numbers, like for example, in case of Paytm and Zomato, though the companies were great, they had built great platform, but it took a while for company to show in the numbers and the stock price to reflect that. So I think we are a little early in the game when it comes to the Honasa IPO.
Most of the people around on the street have perhaps drawn parallels between Nykaa and something like a Mamaearth. How realistic is that comparison to begin with in the first place? Perhaps a bit of disappointment that came in from Nykaa and the listing that followed through. Are you expecting a similar story coming in even for Mamaearth?
I think the business model is quite different in terms of product category, and even the online and the offline model that each of them have. So I think we should look at it separately. And I think since the company is not showing any great track record at this point of time in terms of profitability, and the valuation exactly is not cheap, just because they had priced it earlier at a higher price doesn't mean that a lower valuation is attractive from investor perspective. So at least from a near-term perspective, there is a case of disappointment.
All right, Hemang, we're just going to leave it at that. And thank you so much for taking on the time and speaking to us this morning.
Sure.
All right, let's talk about Honasa Consumer, the parent of direct-to-consumer brand Mamaearth, which is going to go public today. And it's going to be the second public issue in this week after Cello. The IPO will open on October 31st, which is today, and will last day for bidding would be November 2nd. The investment by anchor investors in the IPO has also been done past with, but if you look at the price band of this one, the valuations have been a bit of concern, but then the price band for the offer has been fixed at around 308 to 324 per share. The company operates several consumer brands, including Mamaearth, the Derma Company, Aqualogica, and Dr. Seth, Ayuga, and B Blunt are some of the offerings that the company has. The IPO essentially consists of a fresh issue only to an extent of 365 crore, and the offer for sale is around 4.13 crore equity shares by the promoter and the investor. Promoter Varun, along with the wife, is apparently one of the sellers, are the selling shareholders in the company, along with Shilpa Shetty Kundra. Apart from that, in terms of how they plan to utilize the proceeds, 182 crore essentially will go towards the advertisement expenses, which is also a cause of worry for the markets given the higher ad spend. Along with that, employee expenses, 100% uptick that we've seen in the previous year. The lot size can be made for 46 equity share and multiples thereafter. Overall, we also caught up with the management and we spoke about how organically can they grow. They expect the driver of the growth coming in from organic expansion here on, but thus far they've driven growth mostly from inorganic means. Having said that, they also said that they're open for strategic and any amount of tactical opportunities that may come their way, and they'll continue to evaluate those opportunities. It is a loss-making company as of FY23, a bit of operational turnaround that we've seen in the first quarter of the financial year. But that's all that we have for you right now. With this, it's a wrap, and goodbye from the entire team who put this piece together. Thank you so much for watching. Please do post your feedback for us in the comment section below. Follow us on the link at the bottom of your screen, and for rest of the updates, stay tuned into moneycontrol.com and Moneycontrol app.